Welcome back to Road to Fire. We're a family of three documenting our journey to fire, financial independence, retire early. Let's talk about our September savings strategy and how this fits into our overall fire blueprint. I will share our current numbers as well and outline our planned goals, so please hang with me. Our goal is to always live off of one income, and we've been working on this for the last few years. In 2020, we finally hit this goal. We've been experiencing job losses in the past, and I even had to live in two different states just to make sure we had the right jobs to help us fulfill our bills. And that has made it a key for us to make sure that we can live off of one income in the future. But because we are able to live off of one income, we have a little more sense of security in our finances. Even if one of us lost our jobs, God forbid, we'll still be able to sustain our current lifestyle minus the intensive saving without too many hiccups. Living off of one income gives us a lot of peace of mind. Because we are able to live off of one income, we're able to save 100% of the other income every single month. The key blueprint to hitting fire fast for us is quite simple yet somewhat hard. But first, let me explain that I did not create this blueprint. I have read and researched many of the OG fire starters, spent hours listening to the Bigger Pockets podcast, and came up with a formula for our own individual plan. First is managing your expenses, then increasing your savings rate, invest wisely, and then finally tapping into real estate investing. We are currently working on increasing our savings rate right now, and as we increase our savings rates, we are then able to invest more and faster, quickly hitting our fire number. We spent all of 2018 getting our expenses in a solid place through monitoring our spending month over month to get a good average. There is always room to improve, but we have basically hit the min in all of our expenses for now, and have been able to set a budget since then consistently every year afterwards. We have three expenses we focus on to help increase our savings rate. Our first one is rent or mortgage in the near future. We could have chosen a smaller and more affordable place, but we opted for a place near my son's school. We live in a 3-bedroom brownstone in the Midwest and currently rent $1,800 a month. Number two is our 2 cars, which is around $675 a month, with a big update in our next step-free journey video, which will be quite obvious, which is coming soon. We finally hit a major milestone on paying off these cars. In sum, we bought a car we love and a car we really didn't love. And number three, which is the hardest to cut or refine, is childcare at about $1,060 a month right now. The only way we can get this lower is to keep him at home 100%, which while we're working at home would be a complete nightmare. Ideally, we would move closer to family to offset this cost and ship him off to grandpa or nana's house each and every day. So here's how our saving impacts our budget. Keep in mind this is the September view, and this adjusts and changes based on our current income. So in October, this breakdown will definitely be different. So here's our September expense report. I made a video on our September budget with all of our details, including our real numbers, and I'll link that here. This is a typical month for us. Because we use a zero-based budget method, our savings is considered an expense, which is just a way for us to track our savings and make sure that all of our income is accounted for. We are averaging a 50% savings rate, and I'll get into that in a bit, but for the month, we are at about 44%. I always outline our top expenses as these expenses impact our savings for the given month. One call out for tithe in case somebody's diving really deep into our numbers. We give a fixed $500 a month and then top up anything we quote unquote owe at the end of the year to align to the 10% giving principle we follow as Christians. Again, we get most of our bonuses around the November and December timeframe, and that's when we top off our tithing and our giving. Let's review our savings breakout details for September. Throughout the month, I might adjust or shift this strategy if needed, but most of the time we set this at the end of the previous month and create automatic saving transfers from each and every one of our banks. So here's our September saving strategy. We will be sending $1,760 to investments. This number is after HSA and 401k contributions that are about $1,200 a month. I created a video on our investment strategy. The process is the same, but the numbers have more than likely adjusted. And I'll add a card here if you're interested. Secondly, we will be sending $2,500 to our emergency account to cushion that account a little bit more. Next month, this $2,500 will probably be shifted to investing in real estate. We then send about $600 to our real estate fund because we plan to buy a house in the near future. Since we plan to house hack, we don't need a very large down payment. We then send about $200 to our travel fund, and this is much lower than usual due to COVID-19. We might pick this back up in the spring, but we're sitting on about $2,000 in flight credits, so this isn't a priority for us right now. We also have a tax account, but we don't start contributing that until January once we see how much we've earned and netted out. We have adjusted our W-4 many times, but still end up with a sizable bill. It might be because of the state, but I'm not really sure, and I'll look into that more around the January-February timeframe. So in total, we are saving and investing about $5,260 in September. Ideally, we have less transferred into cash in our cash accounts or sinking funds, and we'll have more transferred into our investments, but we're planning to move soon, so a lot of things are in a limbo kind of state right now, but fingers crossed for the future. So here's our savings rate trend. To maintain a 50% savings rate, we'll need to increase our savings in the remaining 3 months by 5 to 6%. It should be doable in November, December, as our incomes will be higher due to receiving bonuses and profit sharing checks from our company, but October will be a large stretch for us, so we'll see. I set goals to strive towards that may or may not be something that's attainable, but it just gives us a little bit of a guideline on where we want to be in the future. Hitting our 50% savings rate will keep us on track for our FIRE goals and the timeline we desire. Essentially, the more we save, the more we can invest to reach our $2.4 million FIRE number. Now, if you made it this far, thank you so much for watching, but don't forget to comment and subscribe below. Until next time.